let's get some facts. 37% of you aren't subscribed to this channel. That's almost 4 out of 10 just freeloading the alpha. So come on, hit subscribe and I promise to keep leveling up the show with the best guests and the juiciest insight. Go on, do it now.
Good day, everyone. Welcome back to Real Vision. I'm Jamie Coutts, and today I'm joined by Charles Edwards, founder of Capriole Investments and one of the sharpest thinkers on Bitcoin valuation, macro strategy, and quantitative investing. Now, Charles has been a prescient forward thinker and very much a data-driven investor in the Bitcoin space for many years now, which is why I've always appreciated his work. And his latest research is focused on the forces shaping this cycle, from liquidity, institutional demand, to the rise of Bitcoin treasury companies. And he's also been investigating the emerging risks to the network, like quantum computing. So in this conversation, we'll explore how macro and Bitcoin interplay, whether this cycle is unfolding differently than it has in the past, and how to think about valuation today and what risks could actually catch investors off guard. So with that, Charles, welcome to the show.
Thanks, Jamie. It's great to be here.
You know, I was trying to think back to when was the time I first saw a piece of research from yourself, and I think it was around 2019, if I remember correctly. But I know you've been involved with the space for a long time, but I'm curious to know just about your sort of more formative years before you got into crypto, what they look like and how you came to be where you are today, running an investment firm and also this data analytics platform that you've built.
Yeah, sure. So depends how far back you go, but I guess I've always been, since teenage years, very interested in investing. I studied engineering and finance. Even at that time, I, loved science and physics and trying to understand how things worked, but I was kind of in the back of my mind having this idea that I'd kind of get into the finance investing space ultimately. Through that period, I was very into value investing, Buffett's approach, and kind of trying to come up with a systematic way of doing that. So trying to systematically identify value using sort of a more mathematical approach, if you will, even though obviously it's a moving target. And then worked in engineering for a little bit because you can't go from finance to engineering. It's usually engineering to finance. And did some management consulting for a few years where I was actually spending a lot of time with supply chain companies and helping them model their supply chain, so demand and supply forecasting. For clients like the Defense Force, Toyota actually built a ground-up forecast and modeling platform to forecast demand and supply for millions of SKUs and try and optimize inventory there. So kind of had a pretty heavy programming modeling experience and sort of mathematical experience, I suppose, for all those years. And in my own time was building a Buffett approach to systematic trading on the ASX, the Australian Stock Exchange, to try and basically discount cash flow model the assets on a daily basis and invest in a portfolio of relatively undervalued stocks. And that was okay. It did not too bad at the time. But then in 2017, discovered Bitcoin and just kept researching it. And the more I read, the more I was convinced that this was just going to be a massive game changer, along with crypto in general. And this was, the biggest play, I thought, of the next 5-10 years. So I was also really interested because there wasn't a lot of research at the time or understanding how to value Bitcoin. Many people said you couldn't. There were some models out there, but relatively basic. And so my whole focus at that time, especially for the next few years, and even today to an extent, but a lot then was on how do you come up with a fair value, if you will, of Bitcoin, and then identify over and undervalued regions to try and navigate the cycle and opportunity. So just dove into that and then went full time effectively in crypto, moving towards the hedge fund launch in 2019.
Wow. Okay. Yeah, super interesting. So I think maybe at the same time, while you were trading a quantitative value base or a value factor strategy on the ASX, I was trading pure price momentum strategies built by myself.
Yeah, nice.
garage level sort of like quantitative trading systems coded up in AMI broker and all sorts of things.
Yeah.
And it was the exact same sort of realization that even though in those 2 years I traded the strategy, outperformed the ASX, you start looking at the returns of Bitcoin, it just didn't make any sense to pursue that anymore.
Yeah, pretty much the same story for me.
But you launched a hedge fund in 2019. So how did that come to be? Like, did you do that with your own money or did you find outside investors?
Yeah, so didn't launch the fund that year, but I basically went full time with I just jumped in because I knew I wanted to get to the hedge fund state and was just going to find a way to get there effectively. Firstly, manage my own money. Then just brought out tons of research and published online algorithms that people could use, and that kind of grew my profile. Then we started doing managed accounts, and we were running up to almost 100 managed accounts at the end of 2020. And then with that capital, we'd already launched the asset manager, and then we launched the fund in early 21 and basically moved all the investors into the fund.
Right. And so, look, I mean, your most recent posts have talked about this Bitcoin cycle potentially being a right translated cycle. Can you just explain what that means in practice and how that shifts investor expectations, for timing and risk, and also, I guess, what the opportunity means for this cycle compared to previous ones?
Yeah, definitely. So, like historically, as people know in the Bitcoin space, there's been this 4-year halving cycle, and there still is a halving cycle. But what that meant is that the supply growth rate or the inflation rate of Bitcoin halved every 4 years, and it started from a pretty high baseline. But now the halving rate, or the supply's growth rate, is it's sub 2%, so less than half gold, and it's relatively negligible. In past years, it was double that again. So it was, 10% at some stage. And what that meant is that there was a big dynamic change in the supply that was hitting the market. And that drove a lot of the price behavior, and also meant that the miners had a large portion of relative supply, and their profitability greatly impacted price movements because they would unload Bitcoin if they were losing money or if they're operating at a loss, that sort of thing. That dynamic obviously still exists to an extent, but is, drastically gone, 80, 90%, if you will, because their relative share of the network is so small compared to the bigger players, ETFs, MicroStrategy, treasury companies, etc. So the driving forces behind that are greatly diminished. So that's one factor. Then the other, the main factor is liquidity broadly, at a macro level. It's one topic, but secondarily is everything that's happening with the ETFs. So the ETFs always started 2024. They have a huge portion of the supply. And then the treasury company bubble that we're kind of seeing now, where we have over 170 companies publicly listed buying Bitcoin every day. You add the ETFs and treasury companies together, and they're buying up 400% or more than 400% of the daily supply that's produced by miners. So they are the key driving force this cycle. And a lot of these factors kind of kicked in more recent months, really. Like if you rewind 2 years, which is historically midpoint of the cycle, it was a pretty rough spot for Bitcoin. Obviously, we'd just come out of the FTX fraud and all those issues. We had an administration in the US that was basically railed against Bitcoin. Banks were shut down bank accounts for all the crypto entities were shut down. We were affected by that too. And there was basically very limited on-ramps of capital into the industry. The SEC was aligned against crypto under Gensler. Multiple court cases were established against major companies, which have basically mostly been canned now. And then in really just the last 6 to 12 months, and a lot of the intensity of the change has been the last 6 months, things have changed significantly. Under the current admin, the Genius Act enabling stablecoins for banking, the ETFs launching just over a year ago, various policy changes have occurred under the Trump admin, such as opening the banking industry and ending choke point 2.0, things like that have it's just stacks on top of each other. And that's really opened the gates to capital this year in particular, because institutions know, okay, firstly, the SEC is supportive now of crypto broadly. The banking rails are open. The policy legislation's all in there in support of this. The US government also has a Bitcoin treasury. So many things adding up, which have kind of given the green light to large flows of capital into crypto. And that's what we've seen with the ETFs and treasury companies now, as of today, representing about 12% of the entire market cap. So I'm just looking at a chart. I can pull it up maybe.
So that's the total value of Bitcoin held by the ETFs and Bitcoin treasury companies.
Exactly. So this chart here just shows, so this is our charts platform, but it just shows the percentage of the total market cap held by ETFs and treasury companies. And the total is just about to hit 12%. And that's up from 5% a year and a half ago, 2 years ago. But it's really aggressively doubled in the last year. So, yeah, so it's pretty significant. Yeah.
And you can see on that chart there, because I've talked about this particular chart before, because it was fascinating that, we were starting to see, I guess, the emergence of these new institutional flows, but the takeover from Grayscale from 2021, if you can just scroll back to that 2020, 2021 market, what I find interesting about this chart is that really, if you look at it from a rate of change perspective, you get very clear signals for either intermediate tops, but also potentially cycle ending tops as well. So this chart here tells you the overall participation of these new institutions and how much of the overall market cap they account for. But you've also got a really interesting rate of change chart for these metrics as well. And if you can sort of see that rate of change peak into the intermediate tops. Yeah,
exactly. Yeah, that's the first thing I noticed. You've obviously got this, very aggressive increase from 1% to 5% near the top of 2021, and then it flattens out, and then sort of late 23. So after the FTX collapse and the washout of that, we just take off again.
Are you seeing anything in that rate of change at the moment which suggests anything about where we are in the cycle?
Well, I like to view this is not quite the rate of change, but it shows a very similar picture. So there's a few lines here, but basically the blue line is the sum of all the institutions we're just looking at, they're buying, versus the red line, which is the Bitcoin mined per day. So when it's above the supply, obviously we've got a big imbalance where demand is just squeezing because there's not enough supply to meet demand. And then this bottom chart here just plots the difference between the blue and the red line. So it's currently at 430%. So 430%, that means we have institutions buying more than 4 times the daily Bitcoin supply. So, and you can just see very quickly whenever that's green, we get the big price appreciations, even more recently from 40K to 80K. And then again from 60 to 100K.
That 60 to 100K was very much Saylor Q4 2121 billion strategy where he was buying a ton of
that's right.
ATM. Do you think that'll ever be repeated in terms of the amount of Bitcoin acquired by Bitcoin treasury companies? That kind of feels like that was the peak in, I guess, the rate of change, or that acceleration of Bitcoin acquisition by these companies. Not to say that they will stop acquiring, but just that there's going to be a deceleration over the rest of the cycle because of Q4 being just insanely, aggressive.
Yeah, it could be. We went from 1.3 million Bitcoin to So it's 1.7, so about 400,000 Bitcoin added. But this kind of, since the dip this year, the US tariff kind of stuff that happened, it's gone up 500,000 Bitcoin. So 500,000 Bitcoins have been added. Remember, there's only 21 million Bitcoin available. So
yeah,
pretty significant. I think it will depend. I think that if Bitcoin goes to 150K at the end of the year, for example, then we'll probably see a lot more activity in this space again. So I think this bubble can get bigger.
Right. So you're not thinking it's near the end. My view was that in terms of the actual, in terms of BTC holdings, it is probably the peak, but not necessarily the peak in US dollar BTC.
Yeah, that could be. That could be. I guess we'll have to wait and see a bit. Yeah.
Yeah. And the other side of this is what's happening in terms of selling pressure. So you've got institutional buyers, you've got the ETFs playing a large part, and there was that previous chart which you were showing, which was not necessarily the rate of change, but something similar. And if I can just sort of zoom in on the edge of that chart, ETFs were actually were net selling at a very for a very small duration there, because they went below the red line, but now they've picked up. And even just in the last couple of days, I think that's because of Metaplanet acquiring 5,000 Bitcoin in this week, that even the Bitcoin treasury companies that were decelerating have also started to pick up as well. So that's kind of interesting from a short-term market signal perspective.
Yeah, definitely. Even if you just look at the ETFs, often they kind of start the trend in a way, I guess, because they're a lot more liquid than the treasury companies. So they kind of dip first, and when they recover, it seems to be when the price starts to recover significantly. Maybe not this so much this time. Well, remains to be seen. We're about equal, or a bit below now. But I think there's definitely something there.
We might come back to Bitcoin treasury companies in just a second, because I think that space is particularly interesting. You've written quite a lot about it, but on the supply side, you've also noted that long-term supply or long-term holders of more than 2 years have been continually selling over the last, probably the last 12 months. And so that's obviously a large part of the supply equation, but you've also got just the amount of institutions that are now trading it with derivative overlays, contributing a lot to that. Also, that the sell side of that demand equation. What was interesting about the long-term holder supply chart that I've seen you post on X was that in 2017, from the point that chart inflected, when long-term holders started to sell, Bitcoin price managed to 10x, roughly. Then in 2021, when the same thing happened, Bitcoin probably 2 to 3x'd. This cycle, it looks like they started selling probably start of 2024. And maybe you've got the chart to sort of confirm this. But that was when Bitcoin was maybe around about 40 or 50,000, and Bitcoin has doubled. So based on previous sort of analogy to the last market, it would seem, just based on this one single metric, obviously wouldn't use anything in isolation, that it's sort of getting us towards the end of the cycle, given how much Bitcoin can rally when you've got this much long-term holder supply coming in. But I'm interested to get your take on that.
Yeah, this is what you say is definitely about right. There's a few ways to measure long-term holder supply. I like the very simple method of supply that hasn't moved for at least 2 years. Another common one is long-term holders, and this is defined by Glassnode as effectively they've done a quantitative analysis, and when people hold coins for more than 5 months, I believe it is, statistically they're likely to keep it for years. So that's another way of doing it. They're both useful, and they show a relatively similar trend on that. But so what you historically notice is, like you said, you get these big rises at the lows of the cycle where people accumulate, or the long-term holders accumulate and buy more Bitcoin at a relatively lower price. So they're traditionally smarter investors, if you will, and then they kind of sell down as price goes up. And you see these lows form near the top historically. Same thing in the last cycle. The overall trend is obviously up, so more and more long-term holders of the network is occurring, which is good. But yeah, like you said, we start to see them start to sell roughly 45K region this cycle. So it's definitely interesting. The long-term holders is a bit more positive. So it had an all-time high back in June, so only a couple months ago, but it's still relatively flat through that period, and it kind of remains to be seen where this will go in the next few months. So we have to remember also in summer months, so middle of the year is historically the worst period of time for Bitcoin. And people kind of know that and talk about it in space, and I think position accordingly, just because there's less liquidity in financial markets. And September is one of the worst, if not the worst months as well. So that's a consideration. And then Q4 is typically the best period seasonally for Bitcoin, where a lot of price appreciation happens. So this could jump back up soon. It remains to be seen. But yeah, this kind of downtrend is definitely probably one of the most concerning things for me this cycle, for sure.
So Charles, one of the things that I've been wondering really since the arrival of ETFs is how the on-chain data and the signals from it will change, because a lot of activity is now sort of concentrated into these wallets controlled by the ETFs. And so you're not getting the same on-chain footprint or signal. Have you thought about that? And has that changed any of your frameworks?
Yeah, that in particular caused us a bit of difficulties in 2024 during that transition period where the ETFs went live in January. And as I mentioned earlier, the long-term holder metric takes about 5 months for any new supplier to be considered a long-term holder. So you got a minimum of a 5-month lag for any of that data to kind of capture. So I've always felt that ETFs in general, institutions in general, as broad brush assumption, but they are, generally speaking, relative to the traditional crypto traders, longer term holders. Most people who buy an ETF or invest in a treasury company are probably going to do it for at least many months on average. And especially if you think about institutions where they have a sort of quarterly cadence, board meetings, that sort of thing, approval process takes a long time. They're not like, on average, they're not turning over as quickly as your everyday trader.
Mm.
So that was quite challenging. I think that caused a lot of noise in the on-chain data and across many metrics in 2024, because there's just a ton of supply moving across from in and out of ETFs, basically, from other holdings and other wallets. So I wrote a piece about that later in that year, Q3 or Q4, about how that had created a problem and charted out a few of the impacts at the time. I think largely that is behind us now, because, all the ETFs, they have wallets and they kind of map on chain ultimately. So the long-term holder metric should kind of have more, stabilized by now. You could argue that the supply last active 2 years is probably less relevant because the ETFs are only less than 2 years old. So that is a good point. And that's why we added those Bitcoin treasury metrics and the ETF data to our website and kind of built that whole analysis suite out, because it wasn't available anywhere else. And this data, I think, is probably the most important data this cycle, because this really is the institutional cycle and the treasury cycle, if you will. And I think they are the primary driving forces here. So I would weight those metrics for ETFs and treasuries higher than long-term holder supplies for now, and probably for the next sort of year or two, or until things are definitely kind of incorporated.
Yeah. It's super interesting. And do you put any weight into the activity metrics of the actual Bitcoin settlement network? In previous cycles, active addresses, transactions, these things did obviously play their part, but the network's evolved. And if you look at the on-chain data at the moment, the activity on the base chain is very quiet. Yeah, we've had like obviously this big move up. So obviously that is the transition to store of value and off-chain entities accumulating more and more of the stack. But is there any signal in that data, do you believe, left, or is it pretty much dead?
To be honest, I always struggled with that data because I've analyzed a lot of this data in different ways, and even years ago, I just didn't find the active address data was very
noisy,
reliable. Yeah, it's very noisy. Wasn't capturing the main trends very well. So I don't really hold much to the active address stuff. And I think the narrative you just discussed is also a key factor. In 2017, all trading on any altcoins or anything was against Bitcoin pairs. There was no stable coins. So there's a lot more turnover, wallet movements, etc. Whereas now everyone basically trades against stable coins or the dollar. And most people who buy Bitcoin just buy it and hold it. So the activity has just plummeted on relative basis, right? To the size of the asset class. So that is a consideration of why that metric may not be so useful. I do like the transaction value metrics a bit more. So what's moving on chain?
Value?
Yeah, so like NVT is a common one. It's like called Bitcoin's P ratio. Or it's the value of the network to the transactions. Sorry?
Was that Willy Woo?
Yeah, Willy Woo created that. And then I put a kind of dynamic band on it back in 2019 to identify when it's relatively high and low. And it helps identify over and under value in the network. I'll just very briefly share so people know what we're talking about. But
yeah, because this one doesn't get talked about a lot anymore.
Almost never in the last few years. Yeah.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.